Gentlemen, welcome back to the channel. Tesla stock had a great day today. The Russell had a great day today. Big tech did not. A lot of your big tech stocks were actually in the red today, despite the Russell being up about 3%, and same being true for Nvidia as well as Tesla. Now, here in this video, I will explain what is coming next for markets, what is coming next for Tesla stock, specifically Tesla heading into October 10th. Does today's events give us a greater chance of going through a large rally heading into October 10th? I think you guys are going to like what we have to say here in this video, but there are also still risks that you need to be mindful of, need to be watching for in our markets. I will also share with you, again, some of the historical performance of markets around Jackson Hole. Jackson Hole tends to be a very negative catalyst for markets, but if you're actually going to see a soft landing, it can be a big positive catalyst as well. Now, this does not happen all of the time. There's really only ever been one other soft landing-ish, kind of, and that was in the mid-90s. So we have a lot to do, a lot of work to get through in this video. Hit that like button as well as subscribe to the channel. I will also share with you my expectations specifically for Tesla stock into year end, because I think this was an event that will live in infamy in our markets. And I think we'll look back at this and say, that was the moment. First up, I think we need to acknowledge today, Fed Jerome Powell declared victory on inflation. Now, this was a declaration of victory from my definition, from most people's definition. This is the closest you will ever get to a Fed chair declaring victory on anything, okay? Specifically on inflation. That's just not something they come out and say. Powell's never going to come out and say inflation is over with. It's done. We won. Okay. He's never going to come out and say that. But the way that he talked about inflation was in the past tense of looking back at history and the inflationary problems we've seen over the past 4 years. He damn well declared victory on inflation today. And the last time a Fed chair declared victory on inflation was right here in 1995, when you actually had a soft landing, okay? And we'll talk about the importance of what I'm showing you here on chart in just a moment. But the bottom line of Powell today, inflation's over with. We won. That's what you got. We are going to start cutting rates. We don't want any more weakening in the economy. And essentially, if the economy weakens, we will react to it. The Fed put is back. The Fed put just means, the Fed's there to bail out markets, to bail out the economy if the economy needs that. Okay. He did mention being data dependent, but at this point, I think it's more of, are we going to cut 25 basis points? Or could we cut 50 basis points? If the economic data is slightly worse, then they will cut more. If the economic data comes in line with expectations and is strong, then the Fed will just probably cut 25 basis points at each Fed meeting. Now, what is going to happen next in markets is pretty interesting. But I do want to talk about this 1995 moment for just a moment, because in fact there's only been 2 Jackson Hole meetings that have ever been positive in at least the history of Jackson Hole for equities. That was 1995 and that was 2007. Now, 1995 was a clear soft landing, okay? No recession. The markets did well. That's what you see on screen now. Specifically, Jackson Hole was August 31st through September 2nd. So Jackson Hole was right here. You ended up rallying pretty aggressive during this moment. You ended up going up about 4% over the course of 7 or 8 trading days. And especially back then, that was pretty aggressive. So you did end up having a very positive reaction to Jackson Hole in 1995. And then you kind of had volatility and just traded sideways for a period. And then you took off in November. Then you came down December, went back up, went down again to start 1996. And then it was off to the races in 1996, especially the first 2 months of the year. So if history plays out in any kind of similar way, it could be up a little more from here, sideways, maybe downwards into the election, and then a parabolic rally throughout the rest of the year. Now, I also want to point out 2007, because 2007 really from 2004 or so, 2005 when the Fed started raising rates, they rose rates to exactly where we are now. And a lot of people thought there was going to be a soft landing. The consensus view in 2007 was we were going to have a soft landing. And I think that's why Jackson Hole was positive for markets during 2007. I think, Jackson Hole normally during normal years is more of a negative event afterwards because it gets hyped up beforehand, right? And then we really don't get much, and well, it's a disappointment. But during years that are pivotal, that are soft landing years, where the Fed declares victory on inflation, I do think that's more of a positive precedence from Jackson Hole. So 1995, 2007 would have been, likely a stronger market. Obviously, if it wasn't for the great financial crisis, then I think, 2007 would have just continued to do well. But Jackson Hole was still positive in 2007 because of the narrative of a soft landing. And now I think this Jackson Hole is also going to be positive for markets because of the narrative of a soft landing. Until the economy gets worse, until the economic data gets worse, then I think markets are going to be pretty bullish here. Now, not all areas of the markets, but at least most of the markets. I think this is, warranted to put on screen now. Jackson Hole tends to be like a really bad event. The average performance is negative 1.4% during the speech. Only 2 positive times, as I mentioned, 1995, 2007. On average, you're negative 1.3% the day later. So that would be on Monday. Historically, you'd be down a lot. On average, you fall negative 0.8% until the next Fed meeting. So, historically, this is not good. And we've seen in recent years, Jackson Hole has actually prompted, corrections, right? 8% corrections have happened 5 out of the last 6 Jackson Hole meetings. Now, again, in recent years, that's been a little bit more dramatic. 10% plus has not been uncommon of a negative return following Jackson Hole, but not in moments where the Fed is actually declaring victory on inflation and the consensus view from Wall Street is we're going to have a soft landing. So this time is much different than other times as far as maybe what could be coming next in markets. Now, I don't want to talk about this too much. I think it's obvious on a day like today. Meta's down 1%, Microsoft down 1/3%, Google up 0.74%, Amazon pretty much break even, Apple's up a little bit more than 0.5%. You're really not seeing big tech do well today. Generally speaking, it's massively underperforming other areas of our markets. Even the equal weight S&P did very well today and did better than every other big tech stock. The equal weight S&P was up 1%. Now, why this is, there's 3 main reasons big tech has outperformed. They're self-financed, okay? They don't have to go to the marketplace to raise capital, okay? That's fine. If we go into a recession, you'd rather be in big tech, at least from the market's perspective. And then number 3 is the cash amounts that these companies have are bringing in billions of dollars in interest a year that goes to the bottom line to boost profitability for these companies. So for those three reasons, big tech has done very well. Not Tesla. NVIDIA is not grouped in that category as well. That's why Tesla and NVIDIA are outperforming even small caps today. Because they have some of those benefits, but not to the same degree as other big tech stocks. And they haven't, well, at least Tesla really hasn't benefited alongside big tech for that matter. So that's why big tech performed well. And that's exactly why big tech is underperforming today. Because as the Fed starts to cut rates, lower odds of a recession. That means, companies that do rely on debt to grow are maybe a little bit more attractive than they are today. And less free money on those cash piles that big tech has. So from that perspective, I don't think big tech will continue to outperform. Thus, you could actually have a negative impact on the S&P via this new Fed regime that we have. Okay, but small caps will benefit a lot from this. Cyclicals that are tied to the economy will benefit a lot from this, because even if they're self-financed, even if they are collecting some interest on their cash, presumably there's lower odds of a recession as the Fed starts to cut rates, which cyclicals are tied to the economy, right? Materials, financials, small caps, consumer discretionary, right? These are all cyclical in nature. They do well when the economy does well, and they do poorly when the economy does poorly. And a lot of your Russell is these consumer cyclicals, right? A lot of the Russell's biotech, but a lot of the Russell is also regional banks, some consumer discretionary names, right? Real estate. So for that reason, I could see a large multi-month rally really taking place in the Russell. Just to get back to all-time highs, you have to rally about 7%. But I do think there could be a bit of a catching up period here over the next coming months, and especially over the next year or two. As long as we avoid that recession, you're probably going to get back up to this trend line. Now, that's going to put the Russell, let's say, a year from now, by August 2025, that could put the Russell at about 320. That would be a large move from here, to say the very least. To get to 320 would be a 45% rally. Tom Lee with Fundstrat believes we could rally 40% by the end of this year. I think that's a little aggressive, but you could definitely see much higher prices over the next couple of months to the next 12 months. I also think that's true for Tesla. I also think from Tesla's standpoint, Tesla is a cyclical company. It is a self-finance company, but it is very, very tied to the business cycle and very tied to interest rates because of the reliance on the customer base that Tesla serves in actually getting a loan to buy the product. 80% of vehicles are financed, and the rates being where they are have really affected affordability. It's just unaffordable to get a new vehicle. And that's why Tesla's had to go out and buy down the interest rates. And in recent months, that has really helped Tesla stock. That has really helped Tesla sell more Teslas. As rates do go lower, that means Tesla's going to have to buy down less interest rate. That's going to mean higher profitability. And probably, let's say a year from now, Tesla could have the best margins we've ever seen in the history of the business. And I know that sounds crazy to people, but Tesla is much more leaned down and efficient today than they were 12 months ago, 24, 36, 48 months ago, right? So what happens when you're this lean and this efficient when you head into a better time? Well, you do very well. Much the same way as a company that survives a recession. Company that survives a recession, they cut back, they fire employees that they realize they really didn't need. They cut back operations to just be more efficient. And after you come out of a recession, that's where those companies do very well. And I think that's kind of like what we're going to see for Tesla to a large extent. We've already went through that consumer recession. Even if on paper we haven't went through a recession, there has definitely been a consumer recession. There has definitely been a recession in margins for sure. And I think coming out of that, we're going to see some pretty impressive numbers over at Tesla. So I think the fundamental case will be a lot better a year from now than it is today. And in fact, I think profitability will be a lot better a year from now than it is today. And I actually think buying Tesla at these prices, you may actually be buying Tesla at like a 40 times multiple or 30 times multiple if profitability does, come in as I expect it will. And that will be much better because, I mean, just think about it. If the Fed does cut rates down to, let's call it 4.5%, just to keep things simple, by the end of this year, well, that's less interest rate Tesla has to buy down. If Tesla wants to keep 2% interest rates, that means Tesla's roughly going to have to buy down, judging off the 10-year treasury. At that time, it's probably going to be like 3.5%. Tesla's going to have to buy down about 1% of the interest rate, 1.5%. That's much better than where it was just a couple of months ago when 10-year treasury yields were 4.5%. That's saving them, what, 1%, 1.5% just on the interest rate buy down itself. So I think this will be a big tailwind for Tesla stock. But also, as rates start to go lower, Wall Street starts to look out and value stocks differently. Okay. When you can get 5%, 4%, risk-free for 10 years, and you don't have to take any risk, I mean, that is pretty attractive to people with a lot of money. For every $1 million at 5%, you make $50,000 a year for nothing. In 10 years, you will have 50% of your money back, right? 50% return. Yeah, that's massive, right? Why would you not do that if you had a lot of money? Well, as yields start to fall, then the risk premiums start to look a lot worse, right? A lot worse for bonds and a lot better for stocks. And it starts to make sense to value companies from a longer term perspective. Because if you can no longer get 50% return on your money over 10 years, now you're only going to get, call it 20% if the bond's 2%, then you would value Tesla higher, right? So from that standpoint, I do think long duration growth stocks will start to do better, much the same way as you've seen in 2021 and 2020. And that's why a lot of your growth stocks did very well during that time, because Wall Street was really looking at them from a 5-10 years, standpoint, as there wasn't really anywhere to invest your money for yields or a huge risk-free return. So think from that perspective, the next couple of months could be very good for Tesla. And heading into October 10th, I think it's possible we could see a large rally, probably into the 300s. But then after October 10th, we probably will see a little bit of selling. I think we're going to get more optimism before the event than what is actually delivered. I do think it will be a little bit of a disappointment, unless we get a definitive date for robotaxis to start. Anything else is going to be a little disappointing, I think, to Wall Street, because we really want, when is the robotaxi coming? I don't know if we get that October 10th. If we do, oh man, it's off to the races. It's new all-time highs for Tesla. But I do think $300 from now till October 10th is most certainly possible. And then I do think heading into the end of this year and the start of 2025, if 2025 looks anything like 1996, with that very aggressive first 2 months of the year rally in 96, you could see Tesla well past all-time highs by, call it, March of 2025, especially as hopefully the economic data confirms we're not heading into a recession. As long as the economic data confirms we're not plowing into a recession, Tesla stock is going to do very well. And I think today is really a day that will live in infamy forever in our markets as the day Powell declared victory on inflation, the day the soft landing was born, if that is the path that we truly go down. And the day we started to see that broader based market rally, the day that big tech got put on the back burner for the first time in 3 years, that is likely today. And I do think if you're invested in the S&P on an index level, I mean, you're probably going to underperform for at least the next year, in my opinion. Could be longer than that, though. So take this with a grain of salt, obviously. Let me know what you think about this information down below in the comment section. I do think Tesla is in for quite an impressive rally, though. And I know I'm looking forward to it. Let me know if you are down below in the comment section. You guys have a great rest of your day. If you guys do want to come trade with us live in real time, check out that link down below in the description of this video. Have a great weekend, and I will see you in the next one.